Right, welcome back to the channel, guys. How are we all this week? Hope you're all doing well. And we've got the Bitcoin chart on the 1 day. Doesn't look too great. We're stuck in a range between the 15,892 level and the 17,046 level. These levels we've already built in previously on the channel. Don't forget, it's our higher time frame weekly support and resistance levels. Go back and watch the videos on how you can apply them to your charts. So looks pretty bearish, looks horrible on the 1 day chart. If we go back in a little bit further on the smaller time frame onto the 1 hour, you can see a few signals of some kind of reversal. So we've got a few classic reversal signals here, starting with the double bottom, and you can see the double bottom played out nicely here. We've got a reaction from this level. We've had an impulse, 1, 2, 3, 4, 5 waves to the upside. This was pretty impulsive there, where the previous low didn't come back and test these levels. So quite impulsive move. That shows there's a bit of strength there. You've had your head and shoulders pattern play out, which is a classic reversal sign. Head and shoulders and right shoulder break. That's played out nicely. And we're just looking at an ABC equal measured move now. What I don't want to see break is the 16,335 level in the shorter time frame. And once we get a reversal on our stochastic and our RSI, and we come back down to test this level, if we get a positive reaction from this level, we can start looking to gain to the 17,046 resistance level again. So this is a shorter time frame. Don't forget, this is something that's probably going to play out over the weekend. But on the higher time frame, that's something that we're going to talk about. What levels do we need to beat? We're going to add some indicators on now to find out what levels we're expecting to get major confluence and a reaction from price action. So we'll look into that now. So if you're new to the channel, subscribe if you do think this content's useful. If you're an existing member of the channel, appreciate you all. We just hit 4,000 subscribers, so thanks very much. Don't forget to share the content with your friends and hit the like button. We'll get straight into the episode now, guys. Let's get right into it.
I'll get it if I want it. Gotta make to myself a promise. I won't quit, keep going till I got it. I won't give up till I'm on top.
Right, okay, so we've looked at the short-term bullish price action, but this is why you need to be careful. If in doubt, zoom out. If you do zoom out, it doesn't look great as far as the technical analysis is concerned. What levels do we need to break here, and what levels am I interested in entering the market? Two things that you need to think about from an investment perspective and from a trading perspective. From a trading perspective, I'm not interested in the market at the moment. There's certain levels that I want to see broken to make sure that the market is moving in the direction that I've predicted. So not there yet from a trading perspective. From an investment perspective, I'm very interested. And remember, none of this is financial advice. But if you go back to our previous two videos, you'll see our bear market strategy, which shows you how to add your levels of support and resistance, how to add your percentages in, how to add areas that you're interested in the market, what percentages that you're interested in the market, and then what percentages you're out of the market. So it teaches you to accumulate, it teaches you to distribute, and it teaches you not to put all your eggs in one basket. But ultimately, you need to go and do your own research on that token. So major level that I want to see broken is $17,046 before we could see any short-term bullish price action. And you can see from this level here, if we do get a break and a close above that, the next weekly resistance levels back at 19,165, and that's a 12% gain from there. So you are talking big levels when you're down at the bottom here, and when the price actions pushed you this far down, there's not much downside, but there's plenty of upside. Doesn't mean we can't go down. The market will do whatever it wants, but those are the levels that I'm interested in. And our bear market strategy would have taught you this level here would have been a good level with a certain percentage allocated of your capital. And then this level here would be another level. But our strategy teaches you that this is going to be half of the level that is. So you'll never be able to put all your money, all your capital, or your dry powder in at these levels, because the strategy teaches you rules how not to. So go back and watch that. I'll leave the first video at the end of this video. So what I want to do is, if we just go back to the top again and add a Fibonacci from the top to the bottom, we'll see what area that we're likely to get a reaction from when we do get a bit of bullish momentum. So Fibonacci tool, this fib retracement tool from the top to the bottom. Just make sure that bottom's right. from the top to the bottom. So these are the areas that I'm looking at from a Fibonacci perspective, the 236, and you can see that coincides with this previous base level here, previous swing low of that move. So 236 is going to be a major level. And from where we are now at the moment, the 236 is, that's a 65% gain, but don't forget we've got all this price action to contend with before we start making those moves. So that's the reason why I'm not trading at the moment. From an investment perspective, allocating small amounts of my capital at these levels does make sense. So it's just going to be a quick one this episode, guys. Hope you found it useful. If you did find it useful, let me know in the comments below, and I'll do more short videos like this. So enjoy the rest of your weekend, guys. Take care of yourselves, and goodbye.